Today I'm sharing Abby's story. It's filled with financial tragedy and loss, and by watching this video you'll learn how to avoid her big mistakes made when she picked her mortgage broker, which ultimately cost her $18,000 in 4 months of her life. And this isn't even the worst part. So keep watching. 1. Smooth talker. When you're choosing a mortgage broker, you want a credit expert, not a sales superstar. A mortgage broker is one who's cautiously optimistic and has a definite game plan on how they're going to help you achieve your goals. Your mortgage broker is saying, don't worry about it, we'll sort it and leave it with me, but never tells you the steps they'll take to get you an outcome, then be very worried. Before choosing your mortgage broker, ask this question. Will my home loan get approved, and why or why not? A great mortgage broker will clearly explain the bank's credit criteria and how you fit. Here's a few things they should cover. Debt to income ratio. So as an example, if you borrow $1 million and earn $100,000, then your debt to income ratio will be 10 times. Loan to value ratio, bank's credit policy, how much you're lending versus your borrowing capacity, your credit score. This year, the banks have had a major shift in the way they look at debt to income ratios. Now, auto declining applications over a certain threshold. This is unprecedented and now increases the chances of your application being declined. Later in this video, I'm going to uncover everything you need to know about debt to income ratio and how you can avoid getting your application declined in 2020. So keep watching. 2. Processes. Bank's assessment is like an assembly line. At each stage, you'll wait your turn in a long queue. If you pass that criteria, you move on to the next step to repeat it all over again. If your application is submitted with missing information, errors, and is outside the bank's appetite, you could be waiting weeks and even months to get your home loan approved. And with so much competition in the market, time is a luxury you could ill afford. A mortgage broker is an interpreter between you and the bank, translating so that both parties can understand and get the outcome they're after. Before choosing your mortgage broker, the next question you want to ask is, how do you submit an application correctly first time, avoiding errors and ensuring it's within the credit criteria of the bank? A great mortgage broker will explain their process and how it allows them to get a consistent outcome. Here are a few things that they should cover. The checklist they've developed. This is a big one. Here at Hunter Galloway, we're constantly updating our checklist because the banks are always changing the goalpost. What they liked last year isn't the same as this. Quality assurance. Humans aren't perfect. Great mortgage brokers have quality assurance processes in place. This is typically where a senior credit officer in the team will review your application, double checking everything from data entry to credit policy before lodgement. Status. Banks give mortgage brokers preferential status, called different names by different banks. Examples include Flame, Platinum, and Premium, typically given by the banks once a number of metrics are met. A few include quality, quantity, and customer satisfaction. As such, it can be used as a rough guide. Finally, if your mortgage broker says they're gonna apply with more than one bank to get your home loan approved, then run. You don't want a mortgage broker who treats your application like confetti. Rather, you want one who has the experience and knowledge to package your application so that the banks find it easy in saying yes first time. 3. Ghosting. 2021 was one of the biggest years for the property market. For many in the industry, it was near impossible to keep up with demand. Last year, we had a number of inquiries from people who had started the home loan process with another mortgage broker, but who hadn't heard in days, weeks, and in one case, even months. The market had changed so rapidly, many in the industry couldn't keep up. So that this doesn't happen to you, before choosing your mortgage broker, ask this question. What happens if you're on holidays or sick? Who will keep me in the loop when you're away? Here's what you're looking for. Team. You want a mortgage broker who has a team, and a big one at that. So even if their assistant is sick, there's someone who'll keep your application on track. Office. You want to avoid a mortgage broker who has no physical office. They're going to have some important information about you, from identification to bank statements. Knowing that they're a real person and have a physical address will ultimately avoid you being ghosted. 4. Charging customers fees. Mortgage brokers get paid by the bank to help you with your home loan, and they get paid upon settlement. Most don't charge a fee for service. So before choosing your mortgage broker, you want to ask this next question. Do I have to pay a fee for your service? While there are some rare occasions where mortgage brokers will charge a fee for their service, you want to know upfront and in full what these fees are and why they've been charged. If you do opt to go with the mortgage broker who is charging a fee, be sure you link payment with the success of your loan. This means that your mortgage broker can't charge you a fee for simply submitting your application getting declined. Rather, link the payment to the approval or settlement of the loan. This will make sure both your interests are aligned. Also, be careful of the fees they are charging. The worst I've seen is a mortgage broker charging a customer for a valuation. And keep in mind that the bank allows us to order these on behalf of customers for free, meaning that outside the time it takes to order a valuation, less than 2 minutes, there's no fee incurred to facilitate this because it's all covered by the bank. So, if you're unsure why your mortgage broker is charging a fee, question for clarification. And if it still doesn't make sense, then it's best to part ways. 5. Abby's story. Okay, so before I get into Abby's story, I just want to make a few things clear. Firstly, I've changed the name of both the mortgage broker and client. Everything else is presented in full. I've done this to protect their privacy because my goal is to educate. It's not to stage a witch hunt against this mortgage broker. We all deserve a second chance. Okay, let's dive in. So in 2020, Abby was looking to build her dream home. Applying for a land and construction loan, she had a minimal deposit and was really reliant on the government grants to get her over the line. She had chosen Lara to be her mortgage broker, who came highly recommended by the real estate agent who sold Abby the land. And all seemed to be going to plan. Lara had been able to get Abby approved, and whilst there were a few delays and hiccups, Abby didn't really think too much of it. She was a first home buyer and it was all new to her. Having received the home loan approval, Lara told Abby to inform her solicitor to go unconditional on the land contract, which is what she did. And just as quickly as she went to the point of no return, things started to unravel. And just a side note, when a home loan is approved, the next step in the process is to sign loan documents and apply for the relevant government grants. This is because most banks are able to process grants on behalf of the government. So when the bank issued loan documents, Lara organized a meeting to run Abby through both the loan documents and the first homeowner's grant at the same time. With no checklists or process, Lara submitted Abby's first homeowner's grant to the bank, and unfortunately, it was riddled with an abundance of errors due to the way Lara completed the forms. Subsequently, Abby's first homeowner's grant was declined and the $15,000 she was eligible vanished. Over the next 8 weeks, Lara challenged the decision through the process, blaming everyone but herself. Abby's home loan application couldn't proceed. It's because the first homeowner's grant was a settlement condition, meaning that without this, the loan would be declined, as Abby didn't have enough funds to complete the transaction. To say Abby's story is tragic is an understatement. With Abby not being able to secure the $15,000 in any other ways, and no way to reverse the first homeowner's grant decision, the bank withdrew her application, as was in breach of the settlement condition. In the end, she was left without a home and would go on to lose more than $18,000, having to forfeit her deposit that she put down for the land. The ordeal would take more than 4 months of her life, and Lara, the broker, would attempt to offer Abby $10,000 in compensation, but only in return for a signed gag order, preventing Abby from sharing her story both on and offline. Abby would go on to refuse this offer and took the matter to the Australian Financial Complaints Authority. 6. Debt-to-income ratio. Never in my 11 years in the finance industry have I seen the banks decline applications for a high debt-to-income ratio, but the game has changed. Officially, banks have updated their credit criteria, and from what we can see, we're expecting problems once you're over 6 times debt-to-income ratio. Each bank has a different take on what this means. Some will decline your application altogether once you're over. Others will want you to be under a loan-to-value ratio of 70%. And yet others can consider up to 90%, including mortgage insurance. What we know is in 2017, Norway introduced a debt-to-income ratio limit of 6 times, which expired mid-2018 and was put in place to cool the property market down. Other governments around the world have used the same metric in very similar ways. Here in Australia, this space is rapidly evolving. Whilst the Australian government has yet to mandate any parameters, it could still be on the cards, so keep an eye out. This metric creates more complexities in an already convoluted lending landscape and is one of the reasons why having a great mortgage broker is so important in this market. So if your debt-to-income ratio is over 6 times, you want to pump the brakes because you're in the danger zone. 7. Other warnings. If your mortgage broker is trying to get you to lie, it's best you move on. Just think for a moment, let's say you do get away with it, but if your mortgage broker is being dishonest with the banks, what makes you think they're being forthright with you? The next warning sign is if they're pressuring you to sign all the paperwork without giving you ample time to review the information up front. Your mortgage broker should give you a clear and easy to understand home loan proposal. And this should cover everything from interest rates to fees, and there should never be any pressure to sign on the dotted line. Taking your time, asking questions, and doing your research before choosing the right mortgage broker will give you the highest chance of success. The right mortgage broker is really worth their weight in gold. And now it's over to you. If you live in Australia and looking for a great mortgage broker, we can help. Get in touch with us online at huntergalloway.com.au or call us at 1300 088 065 and we'll help find the right home loan for you. Thanks for watching, and I'll see you next time.